there are generally, you're saying that I draw this much salary, I draw that much, but there are always ESOPs, equity, when you like get an exit, so you get a huge chunk of money. So like how those things work out and कैसे financial decisions पे revolve करते हैं?
See, Shreyans, there is a salary component, so you have to think of it as a risk-reward equation. So any professional who is taking lesser risk, so the more percentage of the financial outcome will be in terms of salary. So think of it as a simple job in private sector. So 100% of the finance is in terms of salary. Company says, hey, you deserve this much, take the salary, that's it, thank you. If you take little bit of risk and join an early stage startup or even a startup who is not yet maybe something like a Fortune 500 company which will give you that stability, you are taking a risk of joining a startup. So their companies issues ESOPs. Now these ESOPs are employee stock options. These are not stocks directly. So these are not actual shares. This is an option for that employee to buy the stock at a subsidized price if somebody wants to buy that stock actually. So whenever there is a liquidity event, so if that company is doing really great and an investor wants to buy extra shares, or if somebody else wants to buy that extra shares, then what you do is you exercise this ESOP option. So you typically buy that share at 10 rupees, which is the face value, and then you sell it at the market value, and the delta is your gain basically, and then you pay taxes accordingly. But these liquidity events are very rare. That is what you have to understand. So I'll tell you the basic math. Out of 100 startups, more than 90% do not work out. So right from the beginning, you are against the probability. Like we are all engineers here. Like you are facing against probability right from the beginning. कि 90% तो चलेगे ही नहीं. मतलब they will just die. अब जो बच गए, उसमें से even well-funded companies, most of them do not survive beyond 3-4 years. And I'm saying more than 10 million, 15 millions, it doesn't make sure that it will survive. I think out of those 10 companies, 3 or 4 are able to survive but not really great. 2-3 really become great, but only in my estimate, 1 out of 100 companies, 1 out of 100 startups in India are able to provide this liquidity event. Because your startup need to be really, really attractive for everybody, that everybody wants a chunk of it. And so that is why these stocks becoming into actual money, this is a very rare event. But it's a risk-reward equation. So as a founder, most of your financial outcome is locked in terms of equity. That you are basically relying on an assumption that, hey, if this works out, it will mathematically solve for me. Because then it will be 100x.
You only need to be right once.
Exactly. But the probability of that once is 1%. Like that.